Hello and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza, and this is the show, viewers, where you get all your stock-related queries answered by the experts. We will be live on Twitter, and you can also connect with us on a WhatsApp number that will be flashing right on your screen in a short while from now. But having a look at the markets, Cheryl, it's almost midweek, but the only respite is that the markets are still holding itself in green.
Absolutely, midweek. I don't think anyone is complaining about that because it's a truncated week as well. Shrishti, good morning to you. But if you look at the markets, yeah, subdued performance coming in from the benchmark indices, and this is in line with what the global cues also are indicating. Remember, the United States is awaiting their CPI numbers, and so are we awaiting our CPI IIP number. And not just that, today you also have TCS that will officially kickstart the queue for earnings. So a lot of triggers that we are actually awaiting for. Also, let's not forget, you will also have FOMC meet minutes as well that will come out later in the day. So that's the reason why US markets were subdued. SGX Nifty indicated that we were in for a very mild and a very flat start, and that's exactly how we're playing through the script. As you can see, you have Nifty that is holding above the 17,700 marks. That's a positive. You have Nifty Bank that is trading with gains of about 0.2% as we speak, and Pharma is the one that's leading from the front in today's trading session. Take a look at what Divi's Laboratories is doing. A 5.6% uptick coming in for Divi's. I'm sure a lot of the investors of Divi's Laboratories would be happy with this sort of a performance coming in for the counter. Top Nifty gainer as we speak. Adani Enterprises, Tata Motors, Bajaj Auto are the other set of gainers on the infra sector under pressure. But like I said, Pharma is the one that's leading from the front today. So 1.3% uptick coming in for Pharma, Healthcare, Auto, also seeing good uptick, and broader markets. They are the one that are actually outperforming the benchmark indices as we speak, Shrishti. So that's the way how the performance has been. But off late, you have a lot of capital goods sector stocks that are in focus for various factors. No doubt, yesterday ABB was under pressure on that reduced rating that had come in for that particular counter. But look at L&T. That one is near the 52-week high. It in fact hit a 52-week high in yesterday's trading session, subdued in today's trading session, Shrishti. But capital goods, that's the sector that everyone is focusing on, given the fact that government push for capex as well.
Well, yes, absolutely rightly highlighted, Cheryl, and all these counters from the likes of Beach, ABB, Siemens, they're not very far from their 52-week high levels, and even L&T, for the matter, touched its all-time high levels yesterday. But we have seen quite a late year sprint in all these capital goods. Now these stocks are consolidating a bit, but with the government focus on the capex, will it aid the capital goods going ahead as a sector? Let's listen into what Nikunj Talmia, managing editor, ET Now and ET Now Swadesh, had to say on the prospects of L&T specifically and the overall capital goods space as well.
And there are a lot of triggers that really are working in favor of L&T, the strong order book, capex plans, but there do seem to be some risks that if there is a slowdown in order booking, that would be a potential hazard.
That's a universal risk,
exactly.
One, that what happens to the business. But is the order book slowing down? The answer to that is actually no. The fact that the stock has hit a 52-week high and even the valuations are not all that cheap, it just tells you which way the puck has really moved. Imagine India's biggest engineering company hitting a 52-week high. That just tells you the focus and the owners of the market, how it is shifting towards capital goods stocks. L&T 3 years ago got re-rated largely because of the IT businesses which they had incubated. Now everybody is talking about the core business, the engineering business, the capital good business, the construction, the defense business, which is now 65% of the total order book. So I think markets are more excited about the core business rather than the IT businesses which they've actually incubated. For me, it also means that if L&T, which is the pivot stock which has hit a 52-week high, that means for next couple of months and couple of quarters, the entire industrial stroke engineering space is going to be in demand per se. And that's how typically it starts. You may actually see the pivot stock going higher, and then the smaller stocks, they start jumping in. And the shift also could happen more towards construction rather than engineering, because L&T also in a sense has got a huge advantage when it comes to the entire construction space.
All right, so that's the take coming in from ET Now and ET Now Swadesh's managing editor Nikunj Dalmia on L&T and what working in favor of L&T. And also you see the capital goods space as well. Late last year, we saw a sharp rally coming on the capital good counters, and no doubt they are subdued right now. Like I mentioned, you also had Kotak that came out with a stake on ABB, where yesterday they downgraded the stock to reduce from a buy. They set a target price of around 3,425 rupees per share. They're saying they have already factored in 18% CAGR in order inflows over 22 to 25. The downgrade actually comes after the stock saw a sharp rally of about 20% on a YTD basis. Like I mentioned, these capital goods stocks have seen good gains, but let's ask our experts whether these gains will be sustained going ahead. So we have Kunal Bose as well as Shahina Mukaddam joining us on the show. A very good morning to both of you all. But Kunal, let me come first to you. Will these capital goods stocks be able to sustain these gains that they've seen, not only in YTD basis, but also over the last 1 year? Healthy gains coming in all of these capital good names.
Yeah, very smart gains coming to the capital gains sector as such, and this comes at a back where most of the capital goods stocks as well as the index per se was going through a big round of consolidation. So as you can see that the index was going through a multi-month consolidation on the charts, and finally the index has managed to give a breakout of that multi-month consolidation. There were almost 3 or 4 attempts towards the retest of the previous high, and finally we managed to surpass those previous high levels for the capital good index as such. Yes, of course, it's been led by the likes of large cap formidable names like L&T, but even the mid cap end of the tier to large cap names, they've performed quite well for the index, which means that it's the overall breadth from the capital goods which is looking very attractive. My sense is now that because of this breakout, the index would get into a multi-year upward trend from here on. So I think for a trader who's looking out for a longer term time frame should be looking to have some portion of capital invested into this sector.
Okay, so that's the outlook coming in for the sector, but we also have Shahina. Hi Shahina, very good morning to you. What's your take on the capital goods space? And among the listed players, we are getting a bit of a mixed commentary. We are seeing healthy order wins for the companies from the likes of L&T, but Kotak going ahead and downgrading the stock like ABB after the recent rise in this particular stock. How should investor catch or feel or expect about the sector going ahead? What's your outlook on the same, and amongst them any of the stocks that you like at this point in time?
Well, I would be with the camp that infrastructure will do pretty well, in this over the next couple of years, maybe 2-3 years. Given the fact that one is we are, there is elections down the line, and if you see the actual quantum of spend that the government has allocated for the infrastructure sector, it is actually higher than what it had earlier estimated. So now we are talking of almost 4.5 lakh crores additional infrastructure spend that the government is going to do, taking up the total infrastructure spend of estimated 25 lakh crores. So I think the larger companies in the sector are likely to do well, and we are seeing this actually in the order book that some of the large companies have. Take for example Larsen, which also I believe is likely to do pretty well over the next 1 year. They've got historic high order book position as of now, and which is almost about 2.8 times their annual revenue. So I think valuation wise also some of these stocks which have not really performed that well over, if you take a long term period, yes, they have done well in the last 1 year, and I think this performance will likely to continue. And another one space I think is the defense. After a long time, we've seen the Make in India push that the government has put in place. The order book position of some of the defense stocks is pretty good. And there, I will go with the best and the largest, which is Hindustan Aeronautics. There also the order book position is very high. It's almost, I would say, if you say in percentage terms, it's I think about 3.5 times their annual revenue. Valuations are a bit slightly on the higher side for HAL as of now because of the huge run-up it's seen. But I think it still looks good if you're taking, investing for the 3 to 5 year period.
All right, so that's the take coming in from Shahina, not only just on the capital goods space as well as her views coming in on the defense space. But on that note, we'll slip into a break in this edition of Buy Now, Sell Now. When we come back, we'll start taking all of the stock-related queries. So viewers, stay tuned. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. You can connect to us. We are live on Twitter as well as Facebook, or you can write to us on the WhatsApp number that will be flashing on the top of your screen. Do remember, every time you write to us on the WhatsApp, please do mention your name, and also do not call us on the WhatsApp number. We will not be able to take your calls. But yes, along with your name, do mention the stock name that you're looking to invest in. If you've already invested in the stock, then mention the buy price as well as the quantity and the time horizon that you're looking to be invested in a particular counter. That will help our experts help you better. But before we get going, taking all of your stock related query, let me bring on board our guest for today. Once again, we have Kunal Bothra as well as Shahina Mukaddam. And Shahina, before I get going with all the queries, let me ask you, what should retail investors do in such a market scenario to make sure that their wealth is protected?
I believe that retail investors should remain very cautious because most of the global headwinds, in terms of the financial crisis that continues to exist. So I think one needs to be careful. Also, with the continuing war, like Ukraine, Russia, and a lot of other countries being pulled in, I think the overall global scenario looks like a bit, it looks like one needs to be cautious going and investing in a big way right now. I think you can take small bets, pick up small stakes into small investments into companies that you like, where stable managements, good managements, good business prospects, and continue to hold for the medium to long term. I think short term investing, trading in this market will be a zero sum game.
Okay, so that's the advice coming in for all our retail investors. But with this, let's kickstart taking all your stock-related queries. And the first question that I have, Kunal, is coming from Kaushik Mitra, and he's holding two counters. Firstly, it's NTPC from a price of 141 rupees, and the other one is ONGC at a price of 140 rupees. He entered this one. He wants to know which one amongst them is a bet for the long term and where he can invest further with an investment horizon for the next 1 to 2 years.
See, frankly, both charts are very similar for themselves. NTPC as well as ONGC, slow movers, steady movers, at least over the last 1.5 odd year, where we've seen some bit of recovery coming back into these names. But overall, from a longer term basis, the chart patterns are still into a struggling phase for themselves. So out of the two, I think charts of ONGC is something which looks attractive. The only reason for that is because on the monthly charts, the stock is forming a probable inverted head and shoulder pattern. The neckline of this head and shoulder pattern is around 175 mark for ONGC. The stock is trading, I think, 20 rupees lower from those levels, which means that potentially the breakout has not yet happened for the stock on a monthly time scale basis. So if there is any potential out of the two names, I would look out for ONGC, specifically about the 175 mark. Whenever the stock confirms a breakout on the monthly time scale basis, we would expect a very strong up move, a multi-month, multi-year up move beyond those levels. So this is a stock which I think you should keep on radar.
All right, this next query that I have is coming in from Sumit Sharma, and he needs an advice on TCS for the next 30 days, Kunal. He has 45 shares at a price of around 3,355 rupees per share. He is saying that he is seeing some sort of loss on TCS, and we know the TCS earnings will be due this evening. So do you think that it's advisable to take a call on TCS for the next 1 month, or should the investor or the viewer stay put with this one for a longer period of time?
See, I think first things first, the results are due for the stock. So maybe the stock is bound to have some bit of volatile moves. It's very difficult to anticipate the move post results. But then the expectation is that assuming if the stock holds on to that 3,200 mark, a support which it tested yesterday, then I think things could be a lot more better for a stock like TCS. On the downside, 3,100, which is the previous swing low, seems to be the next strong support for TCS. So assuming if both these supports hold on, we may expect TCS to show some good recovery going forward. But the idea is that TCS is a stock, and I'm not sure if it's a futures position, but if it's a cash position, you have to look out for the stock from a long-term play. Look at it this way, that from 2020 to 21, there was a fantastic uptrend which had happened for these IT stocks. 22 and for the first couple of months of 2023, these stocks have gone through a major phase of correction. So there's bound to be a stronger recovery going forward. So TCS ideally should be a stock from a long-term play, not just from a 1 month perspective.
Okay, a long-term play, not just from a 1 month perspective. And just ahead of the result, TCS is a bit volatile and under pressure as well. But Shahina, moving on, and the next query is for you. The question is from Bharat, and he has a long list of stocks in his portfolio. He wants to know which one of them he should exit at this point in time, and in which stock he should make a switch. The name goes on like Polyplex, PEL, Hoodco, IDBI Bank, PNB, as well as Hind Copper. In all of these names, he is having a loss of anywhere between 5 to 20%. So any advice to exit any one of them?
Well, it's difficult to sort of pick up just one stock which you need to exit. But I would say maybe some of the stocks like say Polyplex, for example. If you're looking at a short-term investment, then I think it looks pretty weak on the charts as of now. As well as I think business is likely to slow down a bit. So raw material costs are higher. So one can exit Polyplex if you're looking at exiting one of these stocks as of now.
This one is coming in from Leon, and he's holding Tata Motors, about 1,300 shares at price of 460 rupees per share. He wants to know what the future of this particular counter will be like and whether he can hold it on for one more year. Kunal, I know that this one is your top pick. This morning itself, you had spoken about Tata Motors. I believe the target that you had set was 500 rupees per share for Tata Motors.
Absolutely, Cheryl, the future seems to be bright for Tata Motors. I would suggest a hold. I think I've been advising this stock consistently over the last many years. Would continue to do the same for Tata Motors going forward. In fact, on the technical charts, there are two very important patterns which have been, which are on the verge of a breakout for Tata Motors. One on the monthly time frame, where the stock is confirming a breakout of a major bullish pennant formation. So, looking at the previous highs of 550, 540 for Tata Motors, if you try and draw a pattern, then it's a classical bullish pennant formation which has been broken out for the stock or is on the verge of a breakout on the monthly time scale. And even on the quarterly charts, the stock is ending a phase of a major correction. So on both the accounts, the stock patterns look very attractive. The news flow has been quite positive. I would suggest to stay put with Tata Motors.
And what's your take on this, Shahina? Because what even Leon is addressing is that there are a lot of negative news flows that he is sensing around Tata Motors. On the charts, technically, everything looks perfect for Tata Motors, is what Kunal is saying. What's your take on the fundamentals?
The fundamentals remain stable and strong. I think the international sales are doing pretty well for them, as well as, of course, the domestic is picking up. They've done good investments. They are making good investments in EV. They have got a good pipeline of products. So I would remain invested in Tata Motors.
Okay, so that's the fundamental as well as techie take on Tata Motors. But Shahina, the next question is for you. Gauri Gupta is holding shares of Paytm, bought the stocks at a price of 540 rupees. Wants to know, is that a hold or sell at these levels? Surprisingly and luckily, she's sitting at a profit.
Well, I think there is some bit of bounce that is coming in Paytm. So I think one can hold and then review maybe in the next 2 to 3 months, because I think valuation wise it's extremely expensive still. But given the bounce, I would look to exit at higher levels.
This one is coming in from Denny. He's writing to us from UK. Kunal, this one is for you. He has Lupin call options, about 650, 2 lots at 21. He's saying it's April expiry. Should he hold or exit?
So I'm not sure the current price for the call option for Lupin 650 call. I think it's at 35, if I'm not wrong, at the current price where the stock is trading. My sense is that I think it's a good time to book out profits over here, because the Nifty Pharma index is getting into an overbought territory. So it may not go into a very sharp correction or a downward trend, but then even if it goes to a time-wise pause, for example, for the next 1 week, it's bound to be that your call option would probably lose more in terms of time decay. So I think it's better that you book out profits over here at 35 odd levels if that's the call option which you've bought for Lupin.
Okay, the next question is from Sanjay and Kunal. He wants to know, can he enter SBI at current levels? Actually, he's planning to enter for quarterly results to book profit, but it's always very difficult to estimate or to predict how the stock will react onto the results. So on to shorter time period, how are the charts looking like for SBI?
Classically we say that 20% retracement for a large cap name from the previous major highs, I think is always a good entry point for someone who's looking out for buying the stock and accumulating from a long-term play. Same is the case with SBI. I think 620 was the previous high for the stock in the month of, or in the fag end of the month of December 2022. and from there the stock has corrected. I think it went to sub 500 levels as well. So that's a zone where I think you should look to accumulate. A 20% correction for a large cap name is generally termed to be a healthy point where you can look to enter. So 500, 510 approximately could be a good band where you can look to enter SBI.
Okay, Kunal, this one is coming in from Ramamurthy from Bahrain, and firstly he's telling you thank you for your guidance on NCC as well as Anant Raj. And apart from that, he has 4 set of queries, but I will let you choose which one you want to talk about. First one, he has 10,000 shares of JP Infra. He's stuck with this one at 3.65 rupees per share. What should he do? Should he go ahead for bulk buying in Praj Industries? Also a buying price for Sri Renuka, and which one is better, Sundaram Finance or Bajaj Finance?
Tough one. I'll take it one by one. JP Infratech, I think you should look to exit stock which has been underperforming. Praj Industries, yes, you can look out for buying the stock. I think the major part of correction seems to be over for Praj Industries, so I think it's a good zone where you can look to start scaling up your positions or building up your positions depending on your existing stance. Renuka Sugar, I would be a bit uncomfortable because I think the stock has been an extremely volatile stock, and I think if you're investing in a sector which is already high beta, it always makes sense to go with a formidable name. I would suggest Balrampur Chini or at best maybe an EID Parry from the same sector. And out of the last questions, Sundaram Finance and Bajaj Finance, I think go for Bajaj Finance.
Okay, but continuing with a query on the sugar space, Shahina, actually Krish is holding shares of Triveni Engineering, and this is the counter he likes in the sugar space, but he entered 200 shares at an average price of 309. He wants to know, can he average further with an investment horizon of the next 2 years? What's your advice?
Well, he can because I think there also there is capacity buildup that is happening both in the ethanol space, that is the refining space, as well as in the sugar space. If he wants to add, he can add it at dips. Maybe he can add it close to about say 250, 240 type of levels. So then he can have a decent return with a target of close to 300.
All right. This next query that I have is coming in from Kabir Bedi. He's writing to us from Punjab. 750 shares of Petronet LNG at a price of around 213 rupees per share. Kunal, he purchased it in February this year itself. He wants to know he should continue holding on to it, or what should his strategy be? He's saying if you suggest holding on, he can hold on for the next 6 months.
Well, I doubt that within the next 6 months the stock is going to do anything dramatic. In case if there is anything across the news flow for crude which happens, but then just looking at the charts, Petronet is a stock which has been very sideways. So look at 2016-17 when the stock entered into a range. 200 is a major support, 270, 275 is a major resistance for the stock, and it's been trading into this band for the last 5 or 6 years. So that itself tells you that it's been a consolidative stock. It is always better to buy the stock when it confirms a breakout on the upside or when it comes back towards a major support. So you can hold on to your existing quantity, but not suggesting an add on Petronet. 200 is a level where you can look to accumulate or add further.
Okay, moving on to the next query. And Shahina, Love Sharma is holding 10 shares of Graphite India at a price of 552 rupees. He wants to know what he should do at this point in time. He's sitting at a huge loss right now, but how the fundamentals looking like, and is there an advice to average this counter?
I wouldn't advise you to average the counter. The numbers have actually been lower if you look at it on a quarter by quarter basis. And I think they will stabilize. But at the same time, I think he should wait before he adds on any positions as of now.
Okay, so that's the advice coming in for Graphite India. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back to Buy Now Sell Now, a show where you get all your stock-related queries answered by the experts. And Shahina, the next query that I have is for you. Is coming from Rakesh Bhatnagar from Delhi. He's holding 2 counters. Firstly is Grovel, 1200 shares at a price of 69 rupees, and the other counter he has is Vedanta. He has 800 quantity at a price of almost 300 rupees. So what's your advice for the long-term horizon in both of these?
Well, I think, see, Groovy, if I think I got that name right, it's a very tiny stock. So I would avoid, avoid investing in this stock. As far as Vedanta goes, I think things are looking up. And while the management, there are a lot of questions being raised from time to time. I think at current levels, it looks like a decent bet to hold or to add, and then one can review after some couple of months.
All right. This next one that I have is coming in from a viewer. Okay, it's Ram who's writing to us from Hyderabad. He wants to know about Laurus Labs. Kunal, does it make sense to look at this counter right now?
Not really. I've been avoiding the stock and in fact recommending an avoid on the stock I think since the last so many quarters. I would still continue to do that. Yes, there has been some recovery for Laurus Labs, but then after being beaten down from being a stock which was at 700 to being at 280 to 290 levels, a mild recovery of 20-30 points may not change the trend meaningfully. So the stock has to show signs of consistent price uptrend, whether it's a matter of maybe a couple of months or a couple of weeks at least, and the volumes have to participate. As of now, we are not seeing any major signs of turnaround for Laurus Labs. That's one of the reasons I would avoid. In case if the outlook changes, in case if the prices changes, then we may change the outlook for the stock price. But as of now, the view remains intact to not invest into the stock.
Okay, but Kunal, the next question is from Jay Krishnan, and he wants to know, is this a good time and good entry price to enter into Naveen Fluorine as well as Bector Foods? Bector Foods has been on your radar, and other than that, what's your view on Naveen Fluorine?
So yeah, both the charts are attractive. Bector Foods, of course, we've discussed a lot of time, looks attractive from a long-term play. So I believe that the entire QSR space as such would probably gain a lot of momentum going forward. So Bector Foods is one of the prominent names over there, would suggest a buy as well as a hold. Naveen Fluorine has emerged as a good breakout. In fact, over the last maybe 1 month or so, the chemical space is buzzing quite a lot. SRF, I think Tata Chemicals as well has managed to see a good breakout for itself. Naveen Fluorine has confirmed a breakout of a multi-week swing high. So chart patterns look attractive. The sector is performing very well, and this indicates that the momentum is here to sustain. So now it's a matter of time with the market also sustains the gain, and we go on to the next level of maybe an 18K breakout. Then Naveen Fluorine and such other names could also participate on the upside.
Okay, this one is coming from T.S. Anantha Krishnan. Sorry, Kunal, one more coming your way. He's writing to us from Madurai. He wants to know your view on Titan. Is it the right time to buy the stock?
Well, I would suggest to wait out for maybe some more time. My sense is that the stock was going through a fatigue kind of a trend. It had a fantastic uptrend in the last 1 month from 2,350 to 2,600. In the last 3 or 4 days, there have been some selling pressure which has emerged at the 2,600 mark, and that generally indicates that maybe it's a profit booking or a shift from Titan to some other sectors. That could result into maybe the stock dropping by another 50 to 100 odd points. So I think if it comes back to 2,500 or below, that is a better zone to buy Titan.
Okay, moving on to the next query, and Shahina, this query is for you. Sandeep Kumar wants to know amongst the pharma bed, which one stock to go for. He's looking for your view on Divi's Laboratories. His investment horizon is for the next 4 to 5 years, and given the upsurge in today's trading session, the stock is already up 6%. So, what's your outlook on the growth ahead?
Well, Divi's Laboratories does look good for the short term after that huge dip with seeing a bounce. So for short term, yes, it looks good. Things are looking up in terms of a new product that will replace some of the losses that they have had in lower revenues in the last 1 year on some of the large products. But at the same time, if I was to go for a long term bet, I would go with DRL in the pharma space. Cipla is also another one of my large cap bets. And if I'm looking for a dark horse, I will go with Aurobindo, because there I think the valuations are extremely attractive and the stock is on a rebound.
Okay, this one is coming in from Hemant, and this one's for you, Kunal. He's saying that he's holding 56 shares of Titagarh Wagon at a price of 162 rupees per share. He's seeing that on daily time frame, the stock is in an overbought territory. Should he go ahead and book profits? If yes, if you advise, then at what price? Can he look to also go ahead and re-enter the stock altogether?
So yeah, I would suggest to book out profits on Titagarh Wagon over here. Now, one of the reasons why I would say that is because the stock in the fag end of the month of March formed a bullish pennant formation. The target of this formation was around 285, 295 zone. The stock seems to have entered into that territory. You're seeing mild bit of profit booking coming back into Titagarh Wagon from today's high of 300 approximately. So it indicates that the stock may now go into a time-wise correction, and there could be an opportunity where you may look to buy back again at lower levels. So booking out profits at current levels or just closer to the 300 mark is a better strategy for the stock, and then look to or aim to buy back again if it dips back towards say 260 or 265 zone.
Okay, Kunal, the another question is also for you. This question is from Karthik Raja, and he is holding 2 lots of future lots of Axis Bank at a price of 865 rupees. So currently at a loss of around 24,000. He wants to know what is the outlook ahead and should he continue holding the futures of Axis Bank?
So I'm not extremely bullish on Axis Bank, but I think HDFC Bank, ICICI Bank, they are better alternatives if you ask me from the larger cap front. I'm not sure if you are ready to make that switch from Axis Bank towards these names, but I would prefer both of these stocks. In case if you wish to hold on to Axis Bank, then I would just suggest that you hedge it with an buying an 850 put option for on the 2 lots which you've bought. I think that's a better strategy, because in case if the stock goes into a correction mode, then it could possibly come back towards 820, 825 as well. And buying a put option would probably help you shield the losses, in that regard. So that's a strategy tweak which I would suggest.
Okay, this one is coming in from Ravi, and Ravi has a query on Aarti Drugs. Shahina, he's saying that he's purchased the stock at a price of around 550 rupees per share. He's saying the stock has actually lost its value over the last 1 year. What's the future prospect for Aarti Drugs? Would it make sense for Ravi to stay put with this particular counter for a longer term or even for the medium term?
Well, I would prefer that he exits RT drugs and he switches into Dr. Reddy's or even Aurobindo. In my view, I think those stocks will give a better return, while RT for the shorter term may give you a slight bounce, but I would prefer exiting.
Okay, moving on to the next question. The viewer hasn't shared his name. So, Kunal, let me just put up the question for him. And he's holding 500 shares of Infosys, and he wants to know the short-term outlook on the same. He hasn't shared his buy price as well. So, onto the charts, how is Infosys putting up?
Again, difficult to guess because the results are due for the stock. So we'll probably get to see post the results how the stock behaves. But I would define a trading range for Infosys over the very near term. 2025 for the stock on the upside as a resistance. So in case of the stock say crosses about the 1430 levels is where you may look to enter into the stock maybe post results. And on the downside 1375 is a good support. So if you're holding on to the stock, and assumingly if you are looking out for a stop loss range or a support range, and 1375 has to be that stop loss or a support for Infosys.
Okay, this one is coming in from Vidya, and she's writing to us from Chennai. Kunal, this one is for you because she's asking about Torrent Pharma. She purchased at an average price of 1,570 rupees per share. She's asking you, is the stock showing a bullish move? And if it is, then should she go ahead and book profit right now or look to average?
So you can just hold on to your existing quantity because of the inconsistent trend for Torrent Pharma. It may take a lot of time to move up higher. So allocating more capital over here may not be a prudent strategy. So for example, just about last week or so, the stock broke out of an inverted head and shoulder pattern. The breakout level was around 1555.60 mark. The stock went up to 1600 levels, and then it's now come back towards 1555, which means that it's a bit of an slow moving and a gradual uptrend kind of a stock. So don't allocate. I would not suggest to allocate extra capital over here, but just hold on to your existing quantity.
Okay, moving on to the next query. And Shahina, this question is from Mahalakshmi, and she entered into the stock of HDFC AMC at a price of over 3,000 rupees. So currently at a loss of approximately 40%. What to do? Is there an advice to average out this counter, and what's the outlook on the same?
No, I would advise that she exits at any rally that she gets and not average. There are a lot of changes that are happening in this overall in the industry, wherein even their margins may take a hit. So, and also as you know, the stock market is likely to remain volatile for some bit of time in the next couple of quarters. So I would exit.
Okay, this one is coming in from Kunal Ria. He's writing to us from Mumbai. He has about 1,000 shares of Elecon Engineering at 300 rupees per share. Kunal, he wants to know what should he do with this particular counter. He's been asking this query time and again, but unfortunately we've not been able to take it on air.
No, I think it's a good strategy to hold on to the stock as of now. After a few months of consolidation, it's made a very good comeback. I think this month the stock has shown some exceptional up move, moving up from sub 400 levels to 446 where it's trading right now. Looks very attractive on the charts, and I think it could be all set for even a breakout of the all-time highs of 476. So I think you should stay put with your investments over here.
Okay, Shahina, Subhendu is holding 100 shares of Aarti Drugs at a price of 400 rupees. He wants to know the outlook for the next 3 months.
Well, as I said, I think RT drugs, if you're looking at a short-term period, you may see a bounce. And, I think a good exit level would be closer to about maybe 415 type of levels. But yes, I would take that opportunity and switch to some pure pharmaceutical stock. Like I already mentioned, Dr. Reddy's, Arvindo, Cipla.
This one is coming in from Padma Sivarao. He's writing to us from Bangalore. Kunal, he wants to know whether he can buy the Deepak fertilizers right now at current price. As we can see today, all these fertilizer counters are seeing very sharp rally. I don't know whether it would be fair to say that this could be linked to the IMD projections or not, but if you look at the fertilizer pack, all rallying. So does it make sense to look at Deepak fertilizers at this price?
Well, you can look to buy Deepak Fertilizer, but a better strategy is, again, I'm not sure whether you already allocated towards the other fertilizer stocks, but there are other names which are also looking quite strong. Coromandel, for example, is looking strong for a breakout about this 925, 930 mark where it's trading right now. RCF has been one of the recommendations which have been advising time and again. I think I was waiting for a retracement to that 100, 105 mark. That seems to have happened for RCF, so it's a good zone where you may look to enter. Fact is, the another stock which has completed a major retracement. It's an extremely high beta stock, but then maybe if it comes back towards say 240, 250 mark, that's a good zone to buy. So I would advise to try and add more stocks and then have a same capital, but add on to more stocks from the fertilizer pack.
Okay, Kunal, Siva from Chennai wants a short-term outlook or rather 1-month outlook on Tata Coffee. Is that a buy at current levels? Because internationally we are seeing the coffee prices surging, but any view on Tata Coffee on this on the back of this news?
So it looks attractive on the charts. Last 4 or 5 days, the prices have been recovered quite well, but the only concern is volumes have not picked up. So I would suggest that in this way of charts, I would believe that it's better to buy the stock at 215 levels because that would confirm a breakout for Tata Coffee. So not suggesting a buy at current levels, but buy on a breakout about 215 mark.
All right, this one is coming from Neha. She's writing to us from Mumbai. And Neha, just a caveat, all the queries that are taken on Buy Now, Sell Now are live queries. The moment you write to us, we try and take those queries. She wants to know about Prestige Estate, Shahina, because she's already invested in this particular counter. She has about 815 shares in this one. And she's kind of a little worried the way how the stock has been moving in today's trading session, not over the past few days. So she's asking what should she do with Prestige Estates. She's saying that she's seeing a loss of approximately 2% on her holding. It would be fair to say that doesn't make sense to look at short-term day-to-day moves in these particular counters, right? Because real estate is definitely a long-term play.
Definitely, I think she should continue to hold on to the stock. Both the sector as well as Estates itself is likely to do much better going forward. So I think continue holding, and she's likely to recover her losses, though I don't know her cost price, but I think the stock is likely to move up from here.
Okay, so that's the advice on Prestige Estates. But with this, viewers, it's once again time to slip into a short break. But don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And let's continue taking all of your stock-related queries. This one is coming in from Sally. She's writing to us from Bangalore. He has 50 shares of KEI Industries at a price of 1,620 rupees per share. He wants to know whether he should add on some more to his holding at these levels, Shahina. Also, he wants your view on APL Apollo, which he has it from the levels of 1,195 rupees per share.
He can add KEI because the stock looks good both fundamentally as well as technically. He can keep adding it and then keep a target of close to about 2,000 levels. And APL Apollo also looks good. I think the pipe sector is looking good. So he can add both the stocks.
Venkat Jala from Hyderabad is holding 500 shares of Mahanagar Gas at a price of 750 rupees. He wants to know, does it make sense to sell some quantity out here and rather enter into some banking names like Canara Bank, Ujjivan Small Finance Bank, etc. He has a long-term view on the investments. Shahina, this question is for you.
He can continue holding MGL. I think there is is some positive developments in terms of gas prices that will have a positive impact on their numbers. And yes, of course, banking sector he can add, but I would prefer in the PSU segment SBI, which is likely to do pretty well. And in the private sector, of course, ICICI Bank continues to do well.
This one is coming in from one more query actually coming your way, Shahina. I'm unsure if you actually track these counters very closely, but Dr. Ravi from Bangalore has written to us. He's seeing an average loss of about 35% in Orient Cement as well as Orient Electric. Now he wants to know what should he do, and he is a long-term investor.
Well, taking Orient Cement to start with, I think he should continue holding. While the stock has corrected, but I think the plans for expansions are there in the pipeline, and they would be increasing capacity, doubling it over the next 3 years. So continue to hold. I think the sector will do better. And as far as Orient Electric goes, I think that looks a bit negative. So I would exit Orient Electric.
Shahina, Ramachandra is holding shares of LIC from a price of 580 rupees. He wants to know, is that an ad for LIC at this point in time? And he is also holding Infosys. So he's looking to make a switch from Infosys to LIC. So what's your advice on the same?
No, I would not suggest that he makes that move. I think it is better to stick with Infosys as of now. Fundamentally, I think that looks better.
Okay, Kunal, this one is coming from Venkatesan. He's writing to us from Coimbatore, and he wants to know whether it will be wise enough to go ahead and short M&M at around 1,230 odd levels.
Not really. I would not recommend to do that.
All right. So what's your advice then on M&M? What should he do? Because given the fact he already is holding, I believe, some.
So I think if you're holding on to your short positions, then I think it's a good time where you should look to exit, because the auto stocks and the sector is making a very strong comeback for itself. Of course, the leaders have changed this time around for the auto sector, but then that's what happens for the sector as such, where the laggards, they tend to go into a leading phase, and the erstwhile leaders, they go into a phase of a pause for themselves. I think M&M has already gone through that phase of pause as well as correction. At 1200 plus mark, I think it's a good zone where you should look to build on more positional longs rather than looking at shorts.
Okay, Shahina, sorry, on to my last query that I asked. The Ramachandra also had a query on LIC. He entered LIC at a price of 580 rupees. So he wanted to know, is that an advice to average this particular counter, and what is your outlook?
Advise him to average the counter as of now. I think it is better he waits for a quarter or two and then reviews the situation.
Understand. Just taking one more from you, Shahina. Manish is holding Bank of Baroda, 100 quantity. No, Manish is holding Penar Industries at a price of 82 rupees. He wants to know the short-term outlook on this particular counter.
Well, I think short-term is good and the stock looks bullish.
From Sudhir, he's writing to us from Mumbai. He has about 10 shares of Info Edge, purchased around 6,808 rupees per share. He wants to know whether he should continue holding on to this position or should he look to exit. Kunal, Info Edge, definitely a heavy loss coming in for the viewer.
Yeah, but I would recommend to hold on. So the phase of the major correction seems to be behind Info Edge. The stock has gone through a sharp correction of more than 50%. I think now it could be a phase where the stock may get into a repair process as well as start off in an upward trend gradually. So hold is what I would recommend.
Okay, Kunal, one particular stock showing good moves recently is Tata Chemicals. Bhaskar from Vijayawada is holding 500 shares at a price of 1,035 rupees. What should he do in this particular counter, and any targets that you have for this one?
Hold, I'll recommend for Tata Chemicals. In fact, it's been one of the recommendations. My earlier targets were 1,035. I would recommend, in fact, in my recent recommendations, I've indicated targets of 1,060 plus for Tata Chemicals. So you can keep a higher targets from current levels. 1,060 to 1,100 could be a modest target range. But my belief is that if the rally for the chemical sector is here to stay and sustain, then you can see much more stronger upside for Tata Chemicals.
All right, this one is coming in from Puneet Sharma. He's writing to us from Delhi, and this one is for you, Shahina. He wants to know whether it makes sense to buy Sumitomo Chemicals at current prices for the longer term.
Well, I think it is better to look at it at dips and not at current levels. I would not buy it as of now.
Okay, Shahina Shiva is holding shares of Apollo Hospitals, 30 shares at a price of 4,515 rupees. He wants to know the fundamental outlook on the same. He's still at a loss, but what's your outlook? Any hopes on recovery?
Well, it is the most expensive stock in the segment, but as we've seen, very strong M&A deals are happening at high valuations. So I would continue holding for the long term.
All right, let me take this one to you, Shahina. This one is coming in from Murthy. He's writing to us from Gurgaon, and he wants to know about HCL Tech. He's already holding some shares at an average price of 1,080 rupees per share. He wants to know whether he should look to go ahead and buy some more. We've spoken a lot about IT stocks in today's show, but HCL Tech.
Yeah, he can buy it, but all the tech numbers are just on the cards in the very short term. So do wait for the numbers to come up. But I think he can buy it. The stock does look good for the medium to longer term.
Okay, but with this, viewers, it's time to kickstart the rapid fire session. And Kunal, the first question coming for you. KB Rao is holding 100 shares of REC at a price of 125 rupees. Should he hold or switch to some other share?
Hold and look to add in case if it dips towards 110.
All right, this one is from Sanjay. He's writing to us from Telangana. Ashok Leyland, makes sense to buy at current price, and what target should this one look? Should he look at for this one? China, let me take this to you.
Yeah, he can buy it. He can buy it, but buy it at dips. Buy on dips.
Okay, Kunal KU Raval is holding shares of Bajaj Finserv from a price of 1,750 rupees, currently at a 25% loss. So exit with a loss or continue to hold?
Continue to hold.
Okay, Anjali from Nasik has bought Concord April future 600 at 608. What should she do with this one?
Hold on, look out for targets in the range of 625.
Okay, Shahina Bipasa is holding 50 shares of tin plate from a price of 335 rupees. Continue to hold on or switch to any other counter?
Continue to hold.
Okay, this one is coming in from Abhijit. He's bought Voltas at a price of 880 rupees per share. How are the charts looking for this one? What should he do, Kunal?
Chart patterns are a bit wobbly because the stock has gone through a correction. I would suggest to hold on, but keep a stop loss of 800 on the trade.
Okay, Satya Kunal is holding shares of Polyplex at a price of 1,750 rupees. What to do? Is that an exit at this point in time?
Would suggest a hold.
Kunal, one more coming your way on ITDC. This one's from Rajeshwari from Chennai. 100 shares at a price of 420 rupees per share. Can she start averaging right now?
Yeah, I think 300 is a better level to average.
Okay, moving on, Shahina Nishant wants to know some of your top recommendations for the long term apart from capital goods as well as defense. Any name?
I would like the consumer segment. I would go with an ITC. It still looks good for 50 target. Some of the other defense stocks that I already have mentioned. You can look at some of the other capital. While we discuss capital stock, you can look at some of the durable stocks also. I think those are good.
All right, quickly, one last one because I had already told the viewer I'm taking his query. This one is from Murtuza from Dubai. Kunal, Tata Elxsi, 6,600 rupees per share is the buy price. Should he average or exit?
I think you should look to exit if it comes closer to your cost price.
Okay, but with this, viewers, it's time's up on the rapid fire session as well as buy now, sell now. Thank you so much, Kunal and Shahina, for joining us and helping all our viewers with their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put this show together. But don't go anywhere. Markets at noon will be taking the action ahead, so stay tuned.